Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report that's all about bouncing back. Think of it like this. Imagine your favorite sports team was down, but managed to score a game-winning point at the last second. That's the kind of story we have here. Before we get started, if you are interested in getting straight insights from corporate documents, subscribe. We also have a Discord community linked in the description below. Join us to discuss all things corporate. We're looking at a Form 8K filing from CaliberCos Inc. This report is like an update a company gives when something important happens, something that investors should know about right away. The date to keep in mind here is May 16, 2025. That's the day the event being reported happened. Think of it as the breaking news date for this particular corporate story. Now let's get to the heart of the matter. It seems CaliberCos had a bit of a scare with the Nasdaq stock exchange. The company received a warning that it wasn't meeting one of the requirements to stay listed on the exchange. This requirement is that the company's stock price needs to stay above $1. This is important because if a company's stock price stays too low for too long, it can get kicked off the exchange. This would make it harder for people to buy and sell the company's stock, which is definitely not good. So what happened? Well, back in May of the previous year, the company's stock price had fallen below $1 for a while. Nasdaq sent them a letter basically saying, hey, you need to get your stock price back up or you're in trouble. But here's the good news. In the compliance notice, Nasdaq informs the company that from May 2, 2025 to May 15, 2025, the closing bid price of the $1 Accession per share or greater, CaliberCos managed to get its stock price back above $1, and Nasdaq sent them another letter saying, okay, you're good, you're back in compliance. So it's like the company avoided getting a penalty. There's a press release attached, but it mainly repeats what we just said. The press release simply restates that the company has regained compliance and is in good standing with Nasdaq. This section simply repeats the first message, that they are back in compliance with Nasdaq's requirements. And that's it. The report ends with the company's CEO signing off on the information taken. Now let's take a step back and look at what this all means. This report isn't about massive profits or groundbreaking innovations, it's about avoiding a potential problem. The fact that CaliberCos's stock price dipped below $1 is a sign that the company may have been facing some challenges. It could be due to a number of factors like market conditions, company performance, or investor sentiment. The good news is that the company was able to turn things around and get its stock price back up. This shows that the company is able to respond to challenges and take steps to protect its listing on the Nasdaq. However, it's important to remember that this is just one piece of the puzzle. Investors should still do their research and consider all the factors before making any decisions about investing in CaliberCos. Overall, this report tells the story of a company that faced a potential setback but was able to overcome it. While it's not a reason to run out and buy the stock, it is a positive sign that the company is aware of the challenges it faces and is taking steps to address them. Alright, that's our breakdown of CaliberCos's latest filing. What's your take on these events and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.